Welcome to tax planning season 2025. We are deep in it here at Modernist, considering how recent changes in the tax code and some uh, changes that we've been living with for a while are impacting folks' financial decisions. And we're doing that work with our clients one on one, with their accountants, aiming to get some good work done by the end of the year. So we wanted to bring you that same insight. So we're going to talk a little bit about what's happening in the tax industry. We're going to talk about what that means for you and how to navigate that. I'm going to talk a little bit about what do we do with the mess that is the OBBBA of 2025, which is the big tax policy legislation that just passed on July 4th. And we're going to talk about what that means for most people's financial situations, what it means for social impact, and then what can we do to resist the aims of the current administration. And then finally, we'll wrap up and talk about what do markets mean for taxes. So looking forward to getting into it. This is organized into chapters. Each of those areas has its own chapter, so you can fast forward to the parts that are most interesting to you. If you have any thoughts or reactions or questions, feel free to pass them back to us. We'd love to hear your questions and help support you if we can. All right, so let's get into it. So let's talk about what's happening in tax planning right now. We want to review where you are. We want to look ahead strategically to see where we're going next and what the long-term plan looks like. Our job is to focus on long-term goals, cash needs, review projections, make sure they make sense with the deep information we know about your situation. And then your job is to handle cash for taxes, give out the documents to the people, keep us all up to date, as well as help make sure your accountant is getting the information we need from them as well, because you are their client, we are not. So it can be a little confusing sometimes, but they need to give us the projections because we don't do tax planning professionally. We help ask them pointed questions so we can get tax planning out of them. I think it's really important for us as individual consumers of tax planning and prep services to understand the really intense industry pressures that are happening in the accounting world right now. So basically, the past 8 years have been 8 years of disruption. When the administration came in the first time, they put through the 2017 Tax Cuts and Jobs Act. Despite it being sold as a simplification of the tax code and processing, it actually made tax prep far more complicated. I think it added up to 11 additional schedules to a standard return because they added all these new ways of saving money on taxes, getting different deductions, and then that just made prep more complicated. It's very common for clients' returns to have been 100 pages before, and now they're 150 pages. And if you think about the work of an accountant as producing the pages of your return that are necessary for you to follow your taxes, if you add that many more pages, the amount of time that takes for them to produce that work, review that work, be able to have you file is much bigger. So we have this huge change happened in 2017, implemented in 2018 primarily. Then there was a pandemic in 2020 in which all the tax deadlines changed. And there were tons of new legislation that was put in place to try and help people economically survive the pandemic. And then there was the unwinding of all of that. And now the current administration has put in yet another, I would say, cataclysmic tax legislation here in 2025. So it's just good for you to know that the accounting world is tired and they really haven't had vacations for years and years because especially during the pandemic, it was like every tax deadline rolled into the next one. So they didn't get the normal breaks in these like very intense transactional phases of their work. The other issue is that there's just a shortage of accountants. If you know anybody who is looking for a career change or is looking to figure out what they want to do with their lives, and they like numbers and they're maybe a little OCD, accounting may be the thing for them. um, the issue is that we've heard from accountant friends that only 64% of Pacific Northwest accountants renewed their licenses in 2023, and there's similar data in 2024. So there's just a lot fewer accountants, and we're hearing this nationally with accountants in other states. So there's a lot fewer accountants. The work is far more complex, so therefore there are higher costs. People leaving the industry, there's a variety of reasons. The industry itself is older, so folks are just retiring, or they're leaving for health reasons, or they're leaving because the work is just really hard, and there's a lot of anti-tax narrative in the states right now that has been pushed by the right and conservative media, and so they're sort of stuck in this really weird, uncomfortable place. I would also say that something else we've noticed happening is that deadlines to get your return filed by April 15th have gotten shorter. So basically, you need to get all your information to your accountant probably by March 1st or middle of March in order to be able to have them say they can file your return by April 15th. So that's just something you should know. If you're not going to be able to make that, I would just tell your accountant now, we're going to file an extension. Let's do everything we need to file an extension, because then you're out of the mess of the April 15th deadlines and you don't have to feel lost in the middle of that. We're also seeing, if you're looking for a new accountant, it is really hard to find folks because the good accountants have shut down their books because they know they can only handle a certain number of clients well. So sometimes people are needing to find 3 or 4 or 5 referrals to see who is available, who can help. So that's just a good thing to know. And then I would just say we need to get used to higher tax bills. Again, when your return is a lot longer, it takes more time, literally, for them to produce this return. I think the other thing that is happening is that there is an IRS staffing crisis and really a technology crisis, both of which have been happening for decades. The Biden administration put through a huge investment in the IRS during the Inflation Reduction Act last year. And of course, that has been summarily deconstructed. And then DOGE went in and cut the IRS staff by 20%. Well, the folks at the IRS are really underfunded, starved for resources, starved for staffing, and really in this difficult and dynamic with the American people. So I would just say, if you hear somebody being mean about the IRS, just remind them that there are actual humans who have those jobs who are necessary for us to keep the system rolling. And if you're looking for some arts perspective on this, David Foster Wallace's last posthumous novel was about the IRS. So clearly a very smart artist was very interested in what it means to gather revenue for a federal government. So that's the IRS staffing crisis. I think it's important to remember that this was all intentional. The conservative side of American politics has been intentionally pulling resources from the IRS, and that produces lower revenue, which allows an excuse to cut the social safety net if your revenue is down. The reality is it means there's going to be fewer auditors for complex high net worth returns. So the very complicated tax planning that people like me know how to do, if that's a little bit shady, it's going to be less likely somebody's going to look at that return. And there's a lot of money there that's available for the American people to pay our bills and take care of our roads and pay for food and all the things that taxes do that are good for our community. So yeah, send some good vibes to the civil servants doing this yeoman's labor. So what are the practical impacts for you? No more check payments will be available. You cannot make a check payment to the IRS by the end of the year. You can only pay online. Digital signatures are required. Digital filing is, I'm not sure it's quite required yet, but it will be. I would say expect delays in payment processing, expect delays in return processing. Also, we're certainly seeing this state and local level, even if you pay online, there's often, the way the technology works is there needs to be a person who looks at that payment and attaches it to your file and the timing at which you intended to pay it. And even if you've paid it, you may still get a late notice. that is automatically produced by the computer because that connection between your payment and your file hasn't been made by a human yet. So I would just expect you receiving late notices or scary letters from the IRS or state or local agencies. Just forward them to your preparer. Don't get all agitated. Just know that this is part of a symptom of the bigger problem. What else do I want to say about this? Oh, and the other issue that I have that I think you should know about is that in addition to firing people from the IRS so they can't actually go make sure the people are paying the taxes that they're supposed to pay. Not being able to make your estimated payments by check will have a huge impact on senior citizens, seniors. It will have a huge impact on people who are not tax savvy, and it will have a huge impact on people who are unbanked. So there's a systematic intention here, and similar to not being able to call the Social Security Administration anymore. If you have to do it online and you are scared of computers or you're not tech savvy, you're less likely to go advocate for yourself in the system. All right, that's that. Next up, the brutal truth about the new tax law. So the actual name of the act is the OBBA, the One Big Beautiful Tax Bill. We have renamed it the Big Brutal Tax Act. Some people were also calling it the Great Inequality Tax Act, or the Me Tax Act is another one I've heard that's somewhat satisfying, not funny, but laugh while we can. I have to be straightforward. This is a total cluster, politically, tax-wise, fiscally for the country. It's a mess. I think that's pretty well established, no matter what sources you're looking at, unless you're looking at the far right, more propaganda side of things. So let's talk about what it actually means from the tax impact. So timing and implementation, about 50% of this bill is going to apply for 2025 taxes. The remainder will apply in 2026. All the things that you're hearing about from the administration about how awesome this thing is, and things that will potentially they're looking to drive an election bump in 2028. All of those benefits sunset after 2028 after the election. So this is an intentional election bump and an intention to basically bribe the electorate to vote for them. This blog post has a very thorough overview of this. This blog post has a very thorough overview of the tax impact, and you can see we've broken down the bill and all the tax implications and what they mean for you. So there's all kinds of nerdy goodness there for you to review. What I would like to also review and help you understand is that the IRS honestly does not know how to implement most of this. Again, there's politicians creating policy that's really driving election turnout in specific communities. And the IRS then now has to figure out how to implement it. So I would expect more schedules are going to be added to our returns in order to figure out how to do this work. That means your CPA may or may not have their software updates yet. They may or may not be clear about how they work because there are so many moving pieces that the calculations are really interconnected. So patience there. I would also say it's really important, no matter what you're hearing in the world, that there's going to be a relatively minimal tax impact and savings for most people. We're seeing about $1,000, sometimes up to $5,000, depending on which state you live in. And that's kind of interesting, right? They're promising a lot of savings, but in reality, what they're doing is they're securing the savings that happened in the 2017 tax bill. So you kind of have to go back to your 2017 return to see what your tax rates would be. It's complicated. If you were a client of ours back then, we asked accountants to tell clients exactly how much they were saving, and the savings were big, especially for our style of clients who have significant income or significant assets. So I think what's important here to know is that there is a massive societal impact of this legislation and a very small personal benefit at this point. The key changes that we should be aware of are the SALT deduction, state and local tax deduction, was increased from in 20 before 2017. It was as much tax as you paid. Then it was capped at $10,000. This is called the blue state tax. A lot of our clients will spend, $300,000 in a year on state taxes, and then they can only deduct 10. So that was in an effort to try and get wealthy people in blue states mad about the taxes they pay, and then create dissent within our own state and local areas where we're actually trying to solve social problems with our tax structures, which is, one could argue, the point of taxes. So the SALT deduction has been increased from $10,000 as it has been for the past 6 years. Now it's $40,000. So if you're in a Oregon, Washington, California, New York, East Coast, any of the blue states, you likely, and you pay taxes in these areas, you're likely to have a bigger deduction and save in taxes. That's the biggest impact we're seeing. What that means for you is that if you owe state taxes, please pay them before December 31st. Then you can deduct them on your federal return. If you wait to pay until April, they're not paid in this year, and so therefore are not deductible this year. They would be deductible next year. There are a lot of business benefits in here. The two that we're seeing the most impact from are bonus depreciation is now a default up to $2.5 million. You can imagine not a lot of businesses are spending $2.5 million on equipment, so they call it the small business depreciation, but we might say the small-ish business depreciation. I also think it's important to note that this is not always the right move, so your accountant will need to actually choose not to do bonus depreciation if it doesn't actually make sense for you. The other thing is that the qualified business income deduction has been made permanent. That was an effort to right-size corporate tax rates and small business tax rates. And so I sort of am fine with that one. It makes sense. And I'm not sure why we would have a tax code that wants corporations to pay lower tax rates than actual small businesses. The other one I want to talk about is the Social Security no tax on Social Security propaganda. That is complete and utter misinformation. That is a lie. It is really just a bigger deduction for people over 65 years old. It sunsets again in 2028 because this is completely unsustainable. We cannot afford this. I've seen some emails coming out from the Social Security Administration to clients proclaiming that this is true, and in reality, it has nothing to do with Social Security. But it's a really good tagline. So what I want to bring our attention to now is the social impact of these changes. So you'll see here we also have a blog post on the social impact. There's a little bit of a preamble, and then our rad colleague Josh Cole made this PDF that you can download or open up that has the impact of the policy, actions you can take, and then the source of the information. Now, I want to just say, we wrote this in July, so things are changing and getting rolled out and getting implemented, but I think it's really important for us to know what the impacts are. Medicaid coverage, long-term care funding is going to be cut, Medicaid for low-income seniors, people with disabilities, SNAP benefits, so children and people in poverty are going to go hungry. This is going to keep food out of the reach of 3 million people across the country. That's the estimate. And food banks were already in a crisis. WIC, which is fruit and veg for women, children, and infants. So we are literally taking the food out of children's mouths in order to give wealthy people tax cuts. Housing assistance for Section 8 vouchers are going to be limited. The impact on the houselessness crisis is going to be intense. And then federal student loan safety net, there were some significant changes there. Some of them are kind of interesting theoretically around policy, but there's going to be limits on annual student loans from the federal government, which is going to really, given what the cost of college is, it's going to force people into private lending, which is not great. Federal loans are good because they have protections for the folks who are taking out those loans. So that's reduce. And then, of course, climate denial has meant that they've removed all the clean energy and home efficiency rebates. So yeah, buy your electric car by the end of September and get that remodel done, or buy those energy efficient appliances by 12/31 of this year. And then, of course, the child they left the child tax credit largely non-refundable. So this is a wonky Democrat thing where we're like, okay, if people are living in poverty, we can at least send them some money back for the child tax credit. But they've made it now non-refundable. So up to 20 million children in low-wage households will receive less than the full credit. Um, Man, it's rough. I am so sorry to be the bearer of bad news, but there are things you can do, which we have outlined here in terms of donating, giving your time, money, social capital, etc. So check out those uplifting blog posts. We're trying to make sense of the present moment for you. And then also this blog post, Money in Politics 2025 and Beyond, this is where we're putting everything as we're trying to make sense of the world as the current administration is trying to counter most progressive policies. So you'll see a ton of stuff on here, including these items that we have focused on with the Big Brutal Tax Act, and some ideas on taking action, some of previous videos I've made, and then art and poetry because it's good for us. Let's see, some things to know about the actual impacts of this. There are going to be restrictions on charitable giving in 2026 plus, especially for the very highest earners. So it's going to make it less beneficial for them to make charitable donations. We talked about clean energy credits are gone. We talked about really the biggest issue is that there's unsustainable debt now that is going to force tax increases in the future. The math just won't math. So, and then we have the fact that the safety net is being stripped away from healthcare, rural hospitals. I'm so sorry, this is so depressing, but it's just important for us to acknowledge that this is the reality of the policy that's being passed. And we're seeing that this is creating nonprofit funding crisis already underway. I'm sure you've seen it with the organizations you are supportive of. And when those nonprofits don't have funding, then the small businesses and organizations that they are helping to fund are going to go into crisis. So what is being done is they're forcing the responsibility of raising revenue and implementing systemic change to the states. And that is problematic because the federal government has far more power to make systemic change for all Americans. All right, I recommend you go listen to some Prince or some David Bowie and dance it out after that little spiel. And next section, let's think about how we can take action. I've been thinking a lot about this George Orwell quote: "The opinion that art should have nothing to do with politics is itself a political attitude or a political opinion." All you have to do is take out the word art and put in the word taxes and say the opinion that taxes should have nothing to do with politics is itself a political opinion. The opinion that investing should have nothing to do with politics is itself a political opinion. So we know that individual donations will not fix these systemic problems, but right now we got to do what we can. So we're certainly seeing that people who are charitably oriented are showing up. Markets are up, so that's good. Why don't we send some more of our investment money from our taxable accounts to the nonprofits out there that need our donations? It's a great time. Let us know if you want to take advantage of that or talk to your own planner about that process. We know that organizing in red and purple states with Republican votes is actually where the work is. So if you write letters to the editor in those areas, if you have a vacation home in a state that is purple or red, please get involved there, because these swing areas, those representatives need to know that their people are not happy. And I think the other important thing that we can do is to counter the anti-tax, anti-government narrative that has infiltrated the rest of the culture from the right. I think it is important for us to, when somebody says something negative about taxes, remind ourselves and them that this is how we fund healthcare, education, infrastructure, libraries, the humanities councils, public murals. I mean, a million things. Sure, it also funds things that we don't agree with, but at the core, food for hungry children, education for our future generations, healthcare so people can be healthy enough to work and be part of our communities. So, one thing you can do is ask your CPA for the exact amount that you're going to save this year, because most people are going to save something, not a ton, but something, and donate that to organizations that have lost their federal funding: arts and culture, public broadcasting, food banks, libraries, medical research, immigrant organizations, anybody really at this point. And the other thing we're really excited about is supporting free tax prep. They are intentionally making it hard for low-income folks or folks in poverty to file their returns. So there are organizations that do this. They do free tax prep. United Way does this across the country, depending on their chapter. Here we have Cash Oregon. So take a look and support them, donate, become a volunteer. If you don't itemize on your return, you don't do itemized deductions, go ahead and consider making that donation to a 501c4 lobbying organization. They're not deductible, but you're not getting a deduction anyway. So why, instead of giving to Planned Parenthood's 501c3, consider giving to their 501c4. Same for queer rights, immigrant rights, etc. That money is important for their long-term goals. All right, Oregon. Oh, Oregon, we love you so much. And there are some things. There's a lot of talk about taxes in this state. I think it's important. There's two taxes at the Portland level that are the talk of town. I'm hearing a lot of disinformation about this. Certainly, the rollout has been lumpy, but I would say that the metro housing and the pre-K for all programs are actually ahead of their strategic plans and operational plans in terms of implementation. That is not how it's always being reported. So I think it's important to go back to the source. When you're hearing some talk about some things, go back to the source, look at the actual organization's updates. That can be very helpful, in addition to investigative journalism. So the last thing I would say is that, again, we're in a state. There was a woman, Danielle Allen, who is at Harvard on her department is how to renovate democracy, and she really called forward Oregon and Portland as a place that's trying to figure out how to fix our government and our tax structures. We're not always winning, but we're at least trying. So, A for effort, Oregon, I guess. The last thing on Oregon that's important is that there is a kicker again this year. It's the way that it applies is weird, but basically, if you paid Oregon taxes last year on your return in 24, you are likely to get a refund on your 25 return when you file in 26. Whew. So we are seeing anywhere from 11 to 17% of your tax liability would be refunded. Right now, it's not fully official from the state. That won't happen until November, but we're pushing hard. We're pushing back on our accountants to say, I know you don't know, but we know there's going to be a kicker. Last year it was 40, or last time it was 40% of liability. That's a huge refund. So at least consider whether to wait on your Q4 tax payment, just in case you end up just getting that money back. That's not an efficient use of your money. The other thing that is possible here is the kicker is a constitutional amendment. But the Governor Kotek, is hoping to be able to hold back about $1 billion for wildfire prevention because the federal government has removed our funding for wildfire prevention. And as we know, here on the West Coast, there are quite a few wildfires. So we'll see if she can pull it off. Lord knows, I would like to make sure that our communities are protected in the next wildfire season and current one. So that's Oregon. Next up, markets. So we are market agnostic tax planners. That means in a rising market, there are opportunities. In a down market, there are opportunities. So in rising markets, great time for charitable giving. Great time to take strategic gains from the portfolio and reallocate. There are some opportunities here. We're being careful about maintaining portfolios when they feel frothy, like they do. And then when markets drop, we're cool with that too, because we can rebalance more efficiently, we can do Roth conversions cheaper, and we can move portfolios into sustainability portfolios over time. So we're fans of market drops as well when it comes to tax planning. And of course, market corrections are totally normal. We expect them. They are projected and built into our financial plans and portfolio management. So if you're interested in some updates on investing, again, if you go to our website, you can go to Investment Insights here, and you can see our most recent video from our investing partner focus on the last quarter, and then all of our blog posts. And we post at least a couple times, once or twice a month. So there's a lot of good stuff on here. So thank you. This is a lot of information, and I'm glad that we don't have to make your accountant sit through it too. And if you have questions, please, 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 please let us know. I'm hoping that this is a more efficient way to give you the information that I think is actually essential for us as both participants in our democracy as well as consumers of tax prep and planning. Again, flip through the chapters as you need. And again, we're here. We've got your back. We're here to support you. If you have any questions, let us know. And please review these action items below. And we're here to act when you are. And really just take good care. Take care of your heart. Take a break from the news when you need to. And I'm seeing this moment as an opportunity to bring more kindness and care and compassion into how I show up in the world, along with a steely resolve to stand with those who are being impacted. So thank you for being part of the resistance, community care, part of this community. Thank you so much. May you be well, and may your tax planning be easeful.